This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India saved billions of dollars by stepping up imports of discounted Russian oil in the wake of the war in Ukraine. But punitive tariffs imposed by the US that came into effect on Wednesday will quickly undo the gains, with no easy solutions in sight. Analysts estimate India has saved at least $17 billion by increasing oil imports from Russia since early 2022. U.S. President Donald Trump's decision to impose additional tariffs of up to 50% on Indian imports could slash exports by more than 40%, or nearly $37 billion, this April to March fiscal year alone, according to New Delhi think tank Global Trade Research Initiative. The fallout from the tariffs will be lingering, and could be politically debilitating for Prime Minister Narendra Modi, with thousands of jobs at risk in labor-intensive sectors such as textiles, gems, and jewelry.
Oil prices steadied on Wednesday, after falling in the previous session, as investors watched for fresh developments in the Ukraine war and weighed an industry report that showed a drop in U.S. crude inventories. U.S. Special Envoy Steve Witkoff said on Tuesday he will meet Ukrainian representatives in New York this week, adding that Washington is also in talks with Russia as it seeks to end the war. Brent crude futures were down 4 cents at $67.18 a barrel as of 0820 GMT, while West Texas Intermediate crude futures were down 3 cents at $63.22.
Moving on to the top news in the energy sector.
China's Commerce Minister urged closer ties in new energy and capital markets in talks with Saudi Arabia's visiting investment minister, the Commerce Ministry said on Wednesday, as Beijing seeks Riyadh's backing for a Gulf trade deal. Beijing is pursuing closer commercial ties with the Gulf states as it seeks a way out of a two-front trade war with the United States and European Union, which have imposed tariffs on Chinese goods over concerns about their low cost and potential to flood their respective markets. At the meeting in Beijing on Tuesday, China's Wang Wentao discussed with Saudi's Khalid al-Faleh the prospect of aligning Chinese President Xi Jinping's flagship Belt and Road infrastructure initiative with Saudi Crown Prince Mohammed bin Salman's Vision 2030.
Vietnam is planning to switch completely to ethanol-blended gasoline from next year, opening up the possibility for the Southeast Asian country to import more ethanol and corn from the United States. The Ministry of Industry and Trade has submitted a proposal to the government to switch to E10, a blend that mixes gasoline with up to 10% of bioethanol, according to ministry documents reviewed by Reuters. It currently uses the unleaded gasoline standards. The switch will pave the way for the import of American ethanol and corn to Vietnam as the Southeast Asian country seeks to narrow its trade gap with the United States, its largest export market, according to one document. Next, we have the top news in metal markets. Copper slipped on Wednesday, breaking 4 sessions of gains, weighed down by a stronger dollar, rising inventories and concern about demand in top metals consumer China. The benchmark 3-month contract on the London Metal Exchange was down 0.5% at $9,790.50 a metric ton by 0940 GMT, having hit a 2-week peak of $9,862 on Tuesday. LME copper has climbed by 11% this year, rebounding from a more than 16-month low of $8,105 in early April.
Iron ore prices dropped on Wednesday for a second consecutive session, as rising supply outweighed strong short-term demand for the steelmaking ingredient. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.64% lower at 777 yuan and 50 fen, $108.70, a metric ton. The benchmark September iron ore on the Singapore Exchange was flat at $102.35 a ton, as of 0714 GMT. Healthy steel margins drove daily hot metal output to hover around 2.4 million tons, generating firm demand for raw materials, including iron ore, and arresting a price slump.
We will now look at the top news in the agricultural sector.
Chicago corn futures lost more ground on Wednesday, with prices weighed down by expectations of a record U.S. harvest, which is prompting farmers to sell their stored crops. Wheat fell for the first time in 3 sessions, while soybeans were largely unchanged. The corn market is under seasonal pressure ahead of the U.S. harvest, which is likely to be all-time high, said one grains trader in Singapore. The most active corn contract on the Chicago Board of Trade fell 0.5% to $4.07 1/2 a bushel. As of 0922 GMT, wheat lost 0.7% to $5.28 minus 1/4 a bushel, and soybeans SV1 were flat at $10.49 minus 1/2 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.